Um, First things first, on the daily time frame, so higher time frame narrative for gold, we've taken lows, induced sellers into the market. Okay, now you can see how we've had false reactions down, okay, until we reach our inducement high, where we now have built liquidity to the lows. Okay, we've induced early buyers into the market, and once we've taken those highs out, okay, um, we now have liquidity, okay, being built to the downside. So not to give a sort of forecast, but because we've taken those highs, I expect us to come down, take these lows, and then the main long all the way back up. Why? Because we've engineered liquidity, as you can see, okay, even to all-time highs. We've engineered liquidity there. So once we take those lows out, I will be positioning myself for longs back up. But you can see how as we started to sell off, okay, we had a breaker structure to the downside, okay, and then we respected those highs above, okay, so there's liquidity above there. Now going into this week, okay, so Monday is here. Notice how we have been respecting these lows to the left, okay. So Friday, you can see how we respected it, had a move up. Now notice what Monday did, okay. Monday took that liquidity. However, we are in engineered liquidity, okay. So that's why for me, I didn't take any positions on gold until these lows are going to go. But there were some intraday moves. So for example, if we just break down what happened on Monday, notice how market opened, we had a move down, induced highs, okay, and I don't even think we took those highs out. So you can see how we ended up just building early buyers, okay, in the market, building liquidity to the downside. We end up taking this high, okay, and then look what happens once we take that high, okay. And once we've induced buyers, okay, we have that move back down, okay. So we have that move back down, taking out all of these early buyers. Now notice how we did form an LB here. We did form an LB here, however we then took lows, so the probability of taking, we now have trapped buyers, okay, inducing sellers, okay. We came back up, broke structure to the upside, respected these lows, came back up. So nothing on Tuesday, you can see, right, started coming back up, and then we just sold off again, okay. So sold off here. So nothing on Monday, nothing on Tuesday. Notice how gold has just built a ton of liquidity to the upside in structure lower and respecting highs, okay. Look what the market does. So we've taken liquidity from the left, okay. We start to, so just like this. So we built a liquidity block. Because we've taken lows from the left, notice how we have sellers getting in to positions. So low to the left, okay. Essentially we broke higher, respected this low or this candle, then we broke higher. So we now have liquidity below here, and that would have been your entry on Wednesday. So stops below that low. I would have targeted that liquidity that we built on Tuesday, okay, as a intraday trader or a futures prop trader. That would have been a perfect target for the day. Okay, and then you can see how we had liquidity, okay, taken at those highs. Okay, so as I was saying, notice how we waited for that creation of an LB. We had that build up, we trapped, okay, we came and took those highs, okay, so that was on Wednesday. Um, and like I said, we're still building in an area where there's engineered liquidity below. So this isn't something I took, but nonetheless was super clean to see. Okay. And then you can see on Thursday, okay, we took that high, inducing buyers. Okay, now this is really, really key. We've induced buyers. All of this below is liquidity. Okay, even these entries that you guys might have taken below is now engineered liquidity. Okay, so you would have been at BE now. Now notice what does Thursday do? Okay, during London, okay, notice how we've induced higher, okay, but we didn't take out this high from the left. So essentially, London has just built liquidity, okay, and then we respected this low, and look at where this move came from, okay. So we've respected. I don't know why it's not. Uh, there we go. So we've respected, okay, and then we moved away. So we now have liquidity below here. Okay, we've created what I would say an LB. Why? Because we've also taken this high from the left. Okay, and now what would have been really, really nice to see on Thursday is if we came and took all of these highs. Okay, again, the market just leaving liquidity. So there was an entry. I mean, I didn't like it because there's still liquidity above, but notice how we took that low, we took this high, we respected the liquidity block. I would have waited for all of those highs to go, okay, and that would have given me confidence to short. Now I am short on gold. Look at all this liquidity we've built below, okay, and then like I said, 4,447, 44.7 is a nice target for gold to run to, okay. If we go to the 1 minute time frame, okay, notice how, okay, we've built liquidity below, longs back up, okay. um yeah, that's pretty much gold's price action this week, okay. um yeah, pretty simple price action. Where I really, really want to focus on is on NQ. Cool, guys. So let's break down NQ. Let me just load up my charts, share my screen, share screen. Okay, cool. Right, let's go through NQ. So NQ, we haven't touched in a while because we wanted it to build liquidity. And as you guys can see, it started to build liquidity. What's happened on NQ? Notice how we've taken these lows. Okay, so it's only right. We've induced sellers into the market, and so I'm looking for price to take out all-time highs again. Now, what did price do? Notice how on Monday we respected this low to the left. We then took it out on Tuesday, and ever since we've been moving bullish. So let's go through price action for the week. Okay. Really, really important to see here, okay, is that we are reacting to what price is telling us. So before these lows have been taken, notice the reactions that we're getting from the left. Okay, look how many times we respected this area. So on Monday, okay, if we look at where price opened up, okay, notice how we induced lower. So we took out these lows, okay? And then we came and took out that inducement high, induced buyers from this area. Okay, notice how we've had the reaction from the area and we've moved up. So on Monday, we would have just been looking for sells back down into these lows. Okay, so I believe there was an entry. If I go down to lower time frames, okay, I do believe there was an entry. So let's have a look. Let's break it down. Yeah, so notice how we've been moving lower, okay? And then we came and took out these highs, okay? This was last week. So we came and took out, was it these highs here? Yeah, perfect. So we took this high out, okay, formed an LB, okay? Notice how we are building liquidity as we move down, okay? So we can mark out where we built liquidity from. Okay, now notice how we took out these highs. Okay, now that could have been a direct entry because we have an LB above. So I'll just mark that out anywhere above these highs. Okay, so if I just move these along, okay, so anywhere above that high, taking out and covering our LB. Okay, and where would we be basically targeting? I would be targeting the build up, so these lows here. Okay, um, yeah, very simple. I would have just taken it to these lows here. Okay, yeah, cool. And then I believe there is a confirmation entry. Let's just have a look. So price came, okay, we took this low. Okay, so we've trapped those early buyers. However, look at all these lows below. Would you be buying? And then we came and took that high. Okay, so we've basically formed, if we zoom in, we've basically formed an LB here. Okay, so we formed an LB. So that's what I like to see. Once we've taken liquidity, we've generated or formed a LB, and then, okay, we're looking for a build up. Now, if I go down to a lower time frame, I do believe there was someone that took this. I think it was Elijah, maybe. Let's have a look. Where is this entry? Um, oh, here we go. So, so we have this LB, and notice how we've induced lower, and then we came and we basically took that inducement high. So anywhere above here, anywhere above those highs, okay, is another confirmation entry, okay, that you would have taken. And again, riding it down to those lows there. So this is what you could have taken, okay, and then targeting those lows there, okay. And that would have been on Monday, in fact. So clean trades there, shorts down, okay. And the only reason for taking these shorts down is because we've induced higher, okay. So we've induced higher to move lower. And if we go back to higher time frames here, okay, you can see that. Okay, so what do we end up doing? Okay, um, now look at once that liquidity is taken. Okay, so on Tuesday, notice how we're building liquidity. You can see that through this trend line. We're just building liquidity here. Okay, until I believe Tuesday stock open, we come and spike. So if I go down to the 15-minute, we come and spike exactly at 2:30. Okay, we spike down and we take that liquidity. Now I believe there's a LB directly to the left hand side. Yeah, there is. So if you wanted to take a direct entry, so there's the LB. Okay, you could have taken this all the way back up, so something like this, covering the LB. Okay, and then riding it to just that high there. Okay, yeah, so the high that took out that low. Okay, so that would have been an entry. Now look at all the liquidity you have above that you could have basically targeted. Okay, but because it was sort of late in the day and also market close on futures, you would have just taken it to those highs. Now there is a confirmation entry that occurred once those lows went, actually. So if we zoom in, okay, you can see how we formed an LB because we took a high and then we came and we took this low, okay, which created our LB. Okay, so formed that LB, so took a high, took that low, formed the LB, we moved higher, we built liquidity. Okay, where did we build liquidity? At these lows. Okay, so look, we broke higher, respected this low, broke higher once again, took that low. Okay, and so that was your confirmation entry basically at 4:25 GMT, and I would have literally just targeted the build up. Okay, so again, notice how I'm very, very strict with my exits. Okay, this whole area respected and moved away. Okay, so that would have been a perfect exit. Okay, and then that was basically Wednesday. Okay, and then we moved higher. Okay, notice how we've built liquidity, okay, at these highs here. So what's the market going to do? It's going to come and hunt for those highs. Okay, so going into, so this was Tuesday, going into Wednesday, I'm still long. We've taken out previous weekly low as well. Okay, look at where we've built liquidity. Okay, all those sellers that were in. Okay, so if we look at these highs, okay, so we've got liquidity there as well. And then we've got these highs as well. In fact, I can just drag this whole thing along. Okay. So we've got liquidity to target. Okay, on Wednesday. Once it pins on, there we go. So we've got liquidity to target. Now look at this. On Wednesday, we're just trickling higher, building liquidity to the highs. Okay, at these lows. Now, what am I looking for if I'm targeting those highs? All I'm looking for is those buyers to get trapped. And once those buyers are trapped, okay, if there's an LB to the left, I'll take a direct entry. Now look at this. Look at where we've built liquidity. Okay, as we're approaching stock open, okay, which is here. Notice how the market comes and takes out all of that liquidity. Okay, now what do I have to the left hand side? What do I have to the left hand side? I have an LB. Okay, now where am I targeted? I'm literally targeting those highs. So basically like that. Okay, stops below the LB. Okay, targeting those highs. And again, like I've been preaching this whole webinar, that your exits are as important as your entries. Now look, we got tagged in, price runs straight to our engineered liquidity, takes that out, and then look what happens. We sell back off and take out all of that liquidity. That is why we need to be so careful with our exits. Okay, and then we basically, after taking out those lows, we come for that engineered liquidity to the left hand side. Okay, we come and take that out on Wednesday. Okay, yeah, we take out basically that engineered liquidity. Okay, you can see how we're still respecting these highs to the left. Okay, so we always need to look at what's happening to the left hand side. So we've got that liquidity to the left now. Why? Because price has respected these highs. Okay, so price has respected those highs. Okay, we sold off. Okay, now where have we sold off to? We've taken out that inducement low. Okay, now look at the timing. We're approaching Asia session. Okay, we've left these lows intact, so we're building liquidity. We come up and we take those highs on Thursday. Okay, so notice how on Thursday we've taken these highs. Yeah, on Thursday. Now this is approaching London session. Okay, what do? So check this out. We sell off. Okay, we've induced buyers by taking out those highs, and then we take out the low, and then we come and take out that high again. Now what has that just done? Someone tell me in the chat, what has that just done by taking out this low and then come in and taking out all of those early sellers? What have we just created here? What have we just created here? Let me know in the chat. An LB. Good stuff. So we've created an LB. Okay. Now, once we created an LB and we had this build up, sellers getting induced, and then what does the market come and do? And this is an entry I took on an evaluation account. Takes that high out. Okay, this is during London. Okay, and then we just sell off. Okay, now where do we sell off to? These lows. Okay, why these lows? Because look at where we have liquidity. Okay, look how many times this area has been respected. We even have a break of structure up. Okay, inducing buyers before, and this is really key. Look at this. I love when I see this. Go back and check your past trades and see if buyers were induced before liquidity was taken. Okay, once that basically, and someone asked me, because I took a long all the way back up to the highs. I was in this whole move, so I took these shorts down to these lows, and then once that LB basically has been formed now, okay, right, I basically waited for this low to go. Okay, and by this low being taken, it's created another LB. So I didn't want to take a direct entry. Now notice how we're still below this area. Okay, we've induced sellers. We're still below this area. Okay, we've induced buyers. Look here, we've induced buyers. Okay, and then basically we trapped them. Okay, now I took my entry much lower down here. Okay, covered stops there, and I rode that all the way to the highs. Okay, and basically that was on Thursday. Okay, I took it all the way to those highs. So if I go on the higher time frame, I basically took it all the way to these highs. This was on a CFD account. And then my last trade of the week, okay, was this here, where this was the last trade that I took. So notice how I have my direction, okay, and this was the last trade that I took. Basically, we took out these lows, okay, and by taking these lows out, we've induced sellers, okay, and this is what I saw. Now there was liquidity below, but again, notice what I said. When I see that buyers have been induced, okay, before liquidity has been taken, I'm willing to put risk on the table, okay, proving that to be an LB. And then this is where I had quite a bit of risk on the table. Notice how we induce higher and then lower, creating this LB, okay. And if I go down to the 1 minute, in fact, it will show this even better. Notice how we stay below these highs, we come and respect them. So this high here, okay, we induce buyers up here, and then I basically entered once we trapped them where that inducement low is, and that was another entry. That was the last trade on NQ for the week, okay, and I took that all the way to these highs here. And that was NQ, okay. Notice what happens after those highs go. Okay, look at the reaction we have down, okay. We come all the way back down, and then we move all the way back up. Okay, no entries because we've taken the highs out, so any buys would be invalid at this point. Okay, let me just save this recording. Just like Elijah has been saying, yeah, you use the minis to forecast and the micro for execution. Okay, now's your chance to ask questions, everyone. So mark 4 hour Jippy on 4 hour on what? BTC bias. I think the last time I checked BTC, it looked good for sales down. Yeah, we've taken these highs. Look at the liquidity we've built below. So yeah, I do see BTC down to the lows for sure. What's the fastest way to learn the strat? Why would you want the fastest way? Ask yourself that question, guys. Hopefully we can do a webinar on mindset and your psychology when you're approaching a strategy or the charts, the markets. You know, there's a reason why 95, 96, even 98% of people fail and don't make it in this game. Okay, it's not because of the strategy. Look at us. There's thousands of us learning the same strategy. The ones that are profitable, consistently making money,
Okay. Um, and the ones that are struggling or haven't made any money from trading in general, it all comes down to the mindset, the flow that you're in. There's things you need to do before you even open the chart. That your the psychology of trading is not spoken about much. Um, there's so much that you got.
Okay, and as I was saying, so to kind of answer a question on the perfect entry or entry model, it's fairly simple. Like here's an example on EuroCAD recently. So in terms of direction, how I'm figuring that out is who's being induced. So we can see how we've broken structure to the downside. Okay. Um, and in doing so, okay, what we've done is we've engineered liquidity above. Now, all I'm waiting for in terms of an entry model, and this happens, this is fractal, so this can happen all the way on the weekly time frame, is the creation of an LB. So notice how we induced buyers. These are the perfect LBs, by the way, when we've had reactions from the lows, and then we take those lows out. So we've created an LB. The next step after an LB is created is we want to see a build up. Now notice how we've had multiple breaks of structures to the upside, respecting those lows. And what's really, really nice to see here is how we respect those highs. Okay, once we've respected those highs, we come and take those lows. Now look at that. Once that build up has been taken and we've got a direct LB to the left hand side, we can take, okay, that entry. Right, notice the LB after as well. Now, all we need to do is target that engineered liquidity. So that's a 1 to 6. That's how you would frame an entry model. So yeah, the technicals are pretty simple. The technicals aren't as difficult as it seems. Obviously, once you get experience with the strategy and once you learn the strategy, you will start to know what to look for and classify, like we were saying, your A star, A plus, B and C setups. But you would know which one's high probability and what's low. Like for example, if a high gets taken out now, you won't be looking for buys, okay? But buy setups can still occur, but they'll just be lower probability because that high has been taken, etc., etc. So yeah, like I was saying, the main part to focus on is yourself and your psychology, how you go into looking at the markets, what state of mind you're in, and also um, what emotions are at play, fear, greed, etc., all play a part. And so it's really, really important that, once you, for example, have taken a 1 to 6 R or you've taken a loss, how do you deal with that? Do you revenge trade? Do you try to, earn a certain amount of money per day, etc.? So it's really, really important to, find yourself in that, and then that will reflect into, the charts. But if anyone's got any other questions, if not, we'll end the webinar here.